Hi, welcome back everyone to Team Junior Coffee Talk. Today we have our Antito, our tax professional from Team Junior. Thank you for joining us today, An. Today he's actually going to help us to shed some light regarding Calsavers and how it's been a talk recently that everybody been discussing regarding. So can you shed some light regarding that, An?
Yeah, hi Frenchie. Hey, thanks for inviting me back.
You're always welcome to join us.
Or at least hang with me for another episode. Thought you could, after the last one, you're gonna quit to leave us.
Oh no, never.
No, but I think obviously these are very important topics, important things to discuss, share. This is just not us talking at our audience or our community member, but it's just a conversation, a coffee talk among brother and sister, among family and friends, among advisor and clients. And yes, you're right. The topic of Calsavers has been brought up a lot, and I know I've been really tired, stressed, overwhelmed to a certain extent because there was just so much to deal with as a small business owner, right? Within the last couple of years, not to mention COVID and all the craziness that we have to go through and the various programs and grants and just support that's out there. So now all of a sudden the state of California said, hey, by the way, this program's been out for a couple of years, but now that you have 5 or more employees, you're required to have what they call a company-sponsored retirement plan.
Wow.
Or some type of retirement plan if your company doesn't provide it, right? So the struggle just sounds like, oh, great, you're giving your employees a retirement plan.
Right.
But
it's good for the employee.
Yeah, when I think, I wasn't employees and I have employees, so I can relate and empathize. But the issue is that, in light of everything the office went through, now this is another thing for the business owner to learn. Right, to get their arms around, right, to prepare, God forbid, if you don't do it, you get penalized, right? And so I think in every business, I can honestly say that we want to take care of our employees because they're really the backbone of any successful business.
Only if they can afford to, though.
Right, but yes, at what cost, what price, right? Now you're basically saying, hey, I got to put some money aside for my employees. I got to get into this plan. It costs money to hire an accountant, costs money to hire money managers or professional, or at least somebody to educate us on where to put the money because, you're not necessarily a fiduciary or a guardian of the account, but you're still accountable to a certain extent because you're encouraging or you're kind of like facilitating an investment account for your employee that is required by the state of California, right? Yeah. So that responsibility increases as more expectations are required as a business owner. So now what I'm seeing is that because of this requirement, okay, and this is not a deterrent for us to start business. It is an encouragement that yes, we got to get our business mindsets, knowledge, capability, to the next level, right? And that means, we mentioned in the last episode about being more technologically advanced, having an email address, using social media, having apps, but in addition to that, we need to do more in providing support for our team members, our employees, right?
And they're the one helping you running your business.
Right. And so I don't disagree that we should have some type of plan. Some of it could be health coverage. Some of it could be some type of bonuses, right? But now the state is saying, now you got to get a retirement plan. To be fair, they're just saying you need to let your employee know that Calsaver is one of the options they can choose to go through, right? And it's basically a Roth IRA that is basically managed by the state of California through a third party. A third party is an investment company that kind of oversee it. They will help you set up portfolios and investment types. And to a certain extent, maybe educate you a little bit, but that support is not there yet, right? And especially with our community, there's cultural competence, language competence that needs to be aware, needs to be, be aware of. And I feel like that's not available yet, right?
Wow.
And I don't want to get my opinion on the type of professional investment support you get because really I don't think they're high caliber, given that I'm also a financial advisor for the last 20 years as well, right? So to this question, Frenchie, yes, it is required. You are required to go onto the website, calsavers.com, and acknowledge that you did inform and educate your employees, that you share with them that this is an option for them. They can opt out. They can, you can put their information, a phone number, in there, and that would make sure to notify the employee that this been notified. You can opt out, or you choose to get a retirement plan. Now, there's no cost for the employer, which is great, right?
Oh, okay.
Yes, your time, cost in terms of like you don't have to put money in or match or contribute, but you still got to take time and prepare and educate your employee. This is an option. This is another item you got to do in addition to you running your everyday business, right?
Wow.
I understand the frustration. So that's the law. We got to do it, but understand this is the trend, okay? Now, I think
the trend of like the 21st century right now. I mean, back then, businesses is like whether you're wanted to own a, clothing shop or something, you just have to have merchandise and people coming in, advertisement. But now it's like the technology, everybody's just shift through, right? The technology of where we're at right now. Look at since COVID, everybody's just moving over to like Zoom and everything. Nobody's really like going to like shopping physical store or anything anymore,
Right.
So that definitely changes a lot. Actually, go back to Calsavers. Does that also apply for like, employee who is like 1099 or just W-2?
Good point, Frenchie. Yes, by definition, right, employee is a W-2 income earner, right? Okay. Somebody gets a paycheck every week, every 2 weeks, pays FICA, FUTA, unemployment, all the payroll taxes you would pay. So that's considered employee.
Part-time and full-time, or
yes.
just full-time?
Part-time and full-time.
Okay.
Okay. Now, understand that the 1099...
independent contractors.
Right. It's an issue that's... And I love that you brought that up because it's a topic that's been really discussed, I would say at length, but not in depth like it should be, right, in our community. Because in the past, a lot of us were just comfortable with just giving everybody a 1099, right? Oh, right. So-and-so worked for me, and I just give them a paycheck every week, every month, and at the end of the year, they just file their own taxes, right? So that's an independent contractor, a 1099, like a realtor or some type of like a construction person that does some project for you, or a consultant or an accountant. You can even 1099 them.
Right.
They can come in and do your bookkeeping or whatever, right? It gets kind of hairy and tricky is when you actually literally hiring somebody as your employee, where you can control their schedule, their performance, the way they do things, the work hour, and the way they're paid, right? Because a lot of nail salons or hair salons, they have people that cuts hair, and yes, they maybe have their own station, and yet might have their own clients, but the payment is paid through one person.
Yep.
Right, IRS, EDD, FTB, they don't like that, right? They like the fact that if you are independent, you basically set up your own business station, you got your own business license, you charge the client individually, separately, right? And, you're just renting out the station. That's, by definition, a contractor. The way a lot of our community members interpret it as, like, nope, I just give them a check every month, they're responsible for their own supply and client, but they share,
the space.
Not just the space, but they share the account in terms of like accepting cash or credit or payments, right? And so they're not independent contractor. If you're actually paying, that person who rent out your station, right, a percentage based on the work that they do, or you share clients and whatnot, that person also have the capacity to be able to charge your customer or the customer they serve separately. Does that make sense? Wow. So yeah, that gets kind of tricky because a couple of audits that happen is that, the client made some very, very strong and compelling cases that, hey, these are independent contractors. Yeah. They have their own client, they do their own thing, they have their own station. The last question was how were the payments were arranged in terms of, the customer coming in and paying. Do they pay the owner of this salon, or do they pay the contractor who actually performed the work? Right. Because that in itself indicate that they're not really independent. But how hard is it to have a separate account, right? Yeah. And I just think the reason why we don't do that is because maybe they're not a full independent contractor, right? Because really by definition, independent, they're not dependent on you. Their skill, they have a certain ability to do the work and job, not dependent on how you want them to do it, not dependent on what time they have to show up, how many clients they have to serve. Does
At
that
their
make
own
sense?
schedule and
Correct,
everything
correct.
that
So-
they want to do.
But then obviously I see the other side of our community members and small businesses where they got so scared they basically give everybody W-2, right?
Yeah,
And there are cases where there are legitimate 1099 contractors, right?
Yeah.
Because there are ways you can set up where how hard is it to get a business license? How hard is it to get a contract to say you're renting a station here or having a separate POS system, right? So that could be arranged as well.
Yeah.
Now, because they felt like it was required for them to do a W-2, they created a W-2 and get wages, pay every week or every 2 weeks. But a lot of that number doesn't make sense, right? They get paid a check with FICA, food to unemployment taken out.
Right. The
But
basic
the amount is
checkout.
very low. And EDD, so no questioning, in the light of COVID and all the unemployment.
You mean
that
their
people-
take-home money, like the net gross, or
It's just the paycheck amount is very low.
oh,
Right?
Yeah.
And so, well, read between the line. Why? It's because maybe there's some payment made under the table.
like
right?
doing half check, half cash, or something?
Right,
Okay,
right.
gotcha.
So, again, this is so that we can be better, right? EDD obviously saw what happened with unemployment applications, unemployment benefits. The what people were just, had a hard time. They recognized that they pay unemployment through their paycheck. Sometimes what is that, 3, 4, 5%, right? And it is an insurance policy, so you buy that as part of the insurance for that in case you get laid off, you have unemployment benefits.
Yeah.
Well, what we saw, all right, is that these folks, because their pay was so low that it didn't make sense.
Right.
For them to be working for somebody, full time, once a month, only getting like $600-700 a month.
Yeah.
So these, again, and then I want to eventually talk about this whole industry standards and what's government agencies see in regards to like what industry, what sector are typically, how certain numbers are commensurate or corresponding to each industry. In other words, if every salon out there in California, right, or
Doing the same
service
thing.
is doing the same thing, then you can kind of say, okay, that's kind of considered. But if certain sector of the population, certain area, certain
Right.
demographic is doing something that's so low compared to everybody else,
Yeah.
they see that and they
Yeah,
have
it's
the
a red
question.
flag, yeah.
Of course, right? They're like, why is everybody getting only $500-600 a month in this?
How are they gonna live on that?
How do they live on that, and how much are they really paying for unemployment?
Right.
And so, and you can't really blame the employer in regard. I think there's that, relationship with the employee and employer, how
Right,
they make that
how-
arrangements. But you can see how people see all that,
Right.
and we just got to be smarter and recognizing that. If there's business smart, but there's also, long-term.
Book smart, where like it actually looked good on the book.
Well, yes, because we talk about how audits are increasing,
Right.
We're talking about IRS audits, but I bet to anyone out there that you're not going to see more audits from EDD, which is usually for equal employee development department dealing with payroll and unemployment.
Yeah.
More audit from them and also from Federal Tax Board because
Yeah.
California is one of the most aggressive tax agencies out there. So anyway, I'm sorry to got sidetracked about the 1099 W-2.
Yeah.
But it just relates to this important point, Frenchie, that as a small business owner, a nail salon, a restaurant, mom and pop, even professional, attorney, accountant, whatever,
Yeah.
are forced to do more now as a business owner, right? So we have to be smart about it. And I hope this forum, this ability to communicate and as brother and sister and share with our community that for us to be more knowledgeable, more active in reaching out, get better as a business owner, right? Knowing what the laws are, what the requirements are, right? And so that we ourselves have peace of mind, right? Creating a template so that maybe the person comes in, your next employee, whoever, your partner, can emulate and use those knowledge, information, and resources to make your business more efficient. The way
Yeah.
we do things, so in the past, has always been one person do this, and
Right.
you just kind of wing it by ear. Now you're like, dude, let's systematize, right? You want to get to the next level. These are the things we do every day. We have a clock in, clock out. Who's working what hour? When do they get up?
Yeah.
This is the wages. These are the tips. And please, 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 understand when you're in a service-based business, restaurants, nail salon,
Right.
beauty salon, there has to have some kind of tips reporting on wages, right? It just does it make sense to just pay somebody a salary, no wage, no tips?
Right.
That's ADD looking at you and wondering, what are you doing here, right?
Yeah.
So that's again using the law to your benefit, right? And do it the right way so that you have more time to focus on getting the clients, improving the experience of the clients, so that you can generate more revenue, right? Have better employees, give them, and maybe you can afford to give them the retirement plan. It doesn't have to be through Calsavers. Could be a SAP IRA, could be a simple IRA, could be just an IRA, could be 401k. There's so many company sponsored program out there that I would love to talk about in the future, right? If our community is ready to discuss that, right? But we just have to take one step at a time, and I think we're just walking way too slow, right? And way too slow. At the same time, our pockets are getting heavier because a lot of us are doing quite well. It's not like we don't have the financial means. I just feel like we're just kind of rigid and stuck in our old way for so long.
Right. We don't know how to use that extra cash that we may have to put it in somewhere to invest maybe. But you know what? To go back to what you have mentioned, how to run the business more efficiently. I think since COVID, I noticed that people don't want to touch pretty much because due to COVID or anything, like touching cash or anything. Even nowadays, any kind of accepting form of credit card, it'll be touch or tap, right? So how is it gonna affect nowadays how business is gonna be able to run more efficiently using nowadays system like Venmo, PayPal, or a Square or something like that? How does that affect businesses service businesses restaurant or nail salon and stuff like that?
Good point, French. I'll answer it in a couple of ways. One, I have to reiterate that I do audits all day long, right? The last 20 years, I pick up every cases that's out there, regardless whether I make money on them or not, regardless, if the clients are appreciative of me or not, right? And so those who knows me knows my reputation, that I've been out there for a while, and I really, really wish you have something like this before, where I can educate, inform our audience and our community members about the various lessons learned that I've experienced, right, dealing with audits. And so when you ask me about, Venmo and payments and really 21st century business running efficiently,
payment,
right, it's that understand, right? Yes, a lot of the businesses we are involved in are cash intensive, right? It's fine, great, right? And also credit cards. Customers are really more, I don't know
they
whether...
don't have cash on hand.
I don't know if they don't
sometimes.
have cash, but they really want that points, right?
Oh, okay. That's a good point. I never really paid attention to
They're more savvy about using credit cards. And so, you don't understand how many times I pick up an audit case because the income that the client reported didn't match with what the IRS got. Because, yes, nowadays IRS pretty much have a record of what typically, are generated based on the industry you're in, the sector, the location, right, and the revenue. Okay, based on a certain revenue of everybody in the industry, what are the typical expenses there are there in the restaurant business or in the salon, right?
So is the number differentiate because depending on the employer reporting a different number and then the employee reporting a different number, that's why they're red flagging?
No, not employee, the employer and the credit card company or the bank,
okay,
right? So to be more specific, somebody reported, they made $500,000 a year as gross income, right? And they got their expenses and all that. And keep in mind, going back to the example of very low salary or wages reported, right? So in an industry standard, you can look and say, hey, this guy reported $500,000 revenue.
And it's lower than the standard.
But then yet their wages, nobody's working. Is it all family members, right? And you can make
an
argument that yes, there might be some family members helping out, working out, being underpaid.
Very interesting and important cases for experience, but Thank you for joining us today with Team Junya Coffee Talk, and hopefully we'll be able to share with you some more fun or interesting, case next episode. And again, just reiterate a little bit. If you have a letter and if you were to talk to your accountant and they're not giving you a really good feedback or response to it, please get a second opinion or reach out to oursalonmoms.com. Address the question directly to Antito's if you have any questions. But if you have any other concerns or whatever, feel free to fill out the questionnaire, and we'll be able to address that either in the next episode or respond back via email to you guys. Okay? Thank you for your time, Antito.
Thank you, everyone.
Have a great day.
Good day.